We're live. We are live. Alright, so this stream is going to break into two sections, okay? I'm going to do. Oh, hold on. Yeah, I'm gonna teach you guys how to trade Forex. That will then sift down into a breakdown of the using replay mode on TradingView, and then I'm going to have another segment where I actually trade. Okay, in the live markets, the market has opened, but it's a little bit too early. So I'm just gonna teach you, spend the time, and really go through the strategy. And yeah, so I have written some stuff low key. Don't expose. Oh shit. Oh shit. I'm exposing everything. All right. Chat. Chat. Okay. So I'm gonna go through my strategy. Okay. I have written a text file for you guys to see. Just want to make sure. Yes. Okay. I guess. Yeah. So I've written a text file. So I'm gonna go over the strategy. I'm gonna go over the text file first, and then I'll go over the strategy, and so you can see it visually. We'll go kind of like a step-by-step process, and then I will do a replay, and then we'll get straight to live markets. Okay. So the text file, boys. I'm gonna have to move this slightly so you guys can see this. All right. So this is my strategy as a whole. Okay. This is the KFX strategy. So this is the complete entry breakdown of everything you need to know. And I'll just quickly go through it. So your initial chart analysis, you begin your trading by opening up TradingView and your MT5, and you do chart analysis. Okay, you're not going to get any entries from or buys or sells without chart analysis. So you need to do your chart analysis. So again, key tool I use is TradingView. It's the main. It's what you see on screen here. This is TradingView. Okay, this is where you mark up your charts. But anyway, okay, so chart analysis. So when you mark up your charts, the first thing I ask is, does your range resistance, which is the roof, we'll go over this, the roof, and does the support, which is the floor, encompass all the wicks in a high traffic area? So what I mean by this is, let's say, we'll go over this, okay? So we'll do this side by side. So does your range, resistance and support encompass all wicks in a high traffic area, i.e., is it clean and aligned, and does it show a clear range? So what does this mean? So we're gonna go into Zoom here. My first time actually working this shit, I'm not gonna lie. Okay. Okay, so this would be for buys. Alright, chat. Actually, I can make that clearer. So this candle is buys, okay? And this candle is sells. Okay, I'm gonna just do a complete breakdown for you guys, alright? For free. So what is a sell? A sell is, okay? A sell is when... How do I change this? Okay. So if this is your buys, that means that price obviously opened up here and moved in this direction. Yeah, can I make that wider? Like what? Okay. So price opened up here and it moved up and it closed here. This is a buy. So this is your open, this is your close, and the distance in between is why the candle is blue, which means that price moved up, it became more expensive. And the same for sells, right? This means price opened up here, it moved down, and it closed right here. And the distance in between is the sell of price. So let's say price here was $100 for a stock. It went down to 50. This is a 50% gap. That price went down, and that's why it's red, because the cost of whatever the asset you're looking at went down. Okay, I'm not going to go over this in complete detail, but this is just the basics. Okay, so let's get into the actual juice of the strategy. So what do I mean by high traffic area and wicks to form your range? Right, your range is a support and a resistance. So the floor, the support, and the ceiling, the resistance. So if I just quickly get on this, so I'll mark this in yellow. So this will be your resistance, and your floor will be down here. The area in between this is your range, okay? This is the range, this is the tradable range. So, let's say, okay, you have price action like this. I'm just going to draw random candles, don't look into it too deep. You have this, okay. You have, let's just draw this quickly. You have this, We'll do another one. And then you've got this, 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 and let's do one more. This, this, and this. Okay. So why is this your resistance and this your support? Well, what I mean by high traffic area and wicks. So these are obviously your wicks, okay? Wicks are areas that price went up. So if I show you with the tool, so let's say price opened up like this, okay? Let's say it came down first. When it comes down first and flips back up, you're going to see a bottom wick from where it came down, right? So what that bottom wick means is that price opened up here, went down first and flipped back up. And then as it flips back up, it's going to create a high, potentially, before coming back down and closing. So that high, right? So let's say price is here right now. So the high, let's say it comes up to here and then comes back down and closes this level. It's going to leave a wick. This wick indicates that price went up to this point and rejected to close down here. And it also went down to this point and rejected upwards to eventually obviously close here. Okay. So wicks, what wicks tell me is that price has tapped an area, a level. Okay, this level here. Let's change colors. Let's do pink. So price tapped this level, tapped this level, tapped this level before you saw a move back down. Okay, and vice versa. Price broke into the range, so it came down into this level, and it's tapped here, here, and here. Okay, your mean area, your average area, before rejecting to the upside. Okay, this forms your range. When you see price, this is what I mean by price action, right? When you see price rejecting X amount of times, not just one, it needs to be a few times, right? When it rejects an area, that is an area of likely support. And the same for resistance. When it comes up, taps these levels, and then you see a strong move down, that is your area of resistance. Okay, and it happens here as well in the drawing, and it will happen here as well. Okay, now that is what I mean by marking your support and resistance. Your support and resistance is the highest traffic area of wicks. So you count for these wicks, you count for these wicks. You mark up your support, so I probably better mark this up and like probably do like down here, right? So your support could be there. So your support, yeah. So I'd mark up my support here, and my resistance, accounting for these wicks, these wicks, these wicks, these wicks, even that one if you want, it's going to be like in this area, okay? In like this area, okay? That is your support and resistance. That is how you mark up resistance, which is the top here, and support, which is the bottom here, okay, the floor. Why is it the floor and the roof? When it taps the ceiling, it comes down, or the roof, it comes down. And when it taps the floor, it goes up. Think about like a bouncing ball, okay? If you throw a ball at the ground, it's going to bounce up. And when it hits, if you throw a ball on the roof or the ceiling, it's going to come back down. Okay, that is resistance and support. That is what I mean by high traffic areas, alright? So let's just get rid of all this. Hello, delete, 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 delete. Alright, so my next point in the strategy, okay? The checklist. Does your break even buys/sells account for an area in between the range resistance and support, encompassing all rejection wicks in a common high traffic area and, if applicable, a common area that returns price back to support resistance, respectively. So what does this mean? So let's break this down, right? So first, what is BE, B/S? Break-even buys/sells is what I call it. Is when you have a range, most times you will have minor zones within the range, right? Minor resistances and minor supports. So areas where price will tap and come back down potentially, and areas where price will tap and go up potentially, right? These break-even buys and sells are weak minor zones that are within your overall range. So when you mark up support and resistance, like we had in the other diagram, you're marking up areas that have the most obvious high traffic resistance areas. So like if you had like all these wicks, this would be your resistance, okay? But if I'm probably better showing you an example. Okay, so let's go to the weekly. Let's delete this for now. So let's use this area, right? This area you can see on the screen. So your most obvious support and resistance, you can see your most obvious support is probably down here. Make it kind of transparent. Your most obvious resistance here, because you have all these rejections up, 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 and a little rejection here. And your most obvious resistance is probably going to be here, right? Where prices came up, came back down, came back down, came back down, okay? Now, break-even buys and break-even sells are minor zones within this overall range, right? Within this box is your break-even buys and sells. So what is your break-even buys and sells? Minor zones, okay? So when you, let's say, we'll just use this, right? So I usually mark up with orange, but I have changed the colors recently. So your break-even buys. So let's focus on the buys. So this is basically another resistance within this range. So I can identify that there's a wick rejection here, there's wick rejections here, there's this volume here, this volume here, and then this volume here. So your average area for a break-even buy is going to be like in this area somewhere, right? Probably like here. Because you want to account for all wicks, so these need to be included, because these are lower, you want to account for them. So I'm going to say like this is your average area. Now what does this mean? This means when price is in your range, and let's say you enter a buy, right? Just a simple, let's say it's going to respect it, and it comes down, okay, and then enters your buy. Let me thicken this up, this is not good. Okay, so let's say price comes down, and you enter your buy at this support level, because you know that when it taps support, it's going to go up. It's a floor. And you enter right over here, okay, there's a chance that price can just tap this level and continue and not ever tap your resistance, okay? And the reason for that is because potentially your minor zone has enough liquidity to continue the move down. What do I mean by liquidity is in ranges, you must respect a top and bottom wick. So you must respect a support and resistance, okay? So what I mean by top and bottom wick, top wick is what you see here. These are top wicks, okay? These are the highest wicks that respect a resistance or a range. And these are your bottom wicks, which are the most amount of wicks that respect your support. With minor zones, you can get your top wick liquidity just from tapping this, without tapping this, okay? You don't, even though this is the overall range, you could still get away with tapping this, like you see, and then price comes all the way back down, all right? So now we're going to get a bit more into, so that was break-even buys. Obviously, sells is the same. So let's say you see these wicks here, these wicks, this rejection. You can even look at this price action, so you can use this wick, or you can even be a bit more extreme, use that wick. Even this wick here, even these, right? So you mark up your average area for sells. So if you were in on sells, then these are like the minor sell support levels where you can manage risk. So let's say that's your area, right? And the reason for that is because these wicks also still respect the area. Let's say that's your break-even sells. If price, like you see here, came down and tapped it, there's a chance you have enough liquidity to drive up. Liquidity is like, think of an idea of like grabbing people's orders. So let's say people are in on sells from this resistance move. People are in sells and it taps here, right? And their stop losses, oh no, sorry, people are in buys and it taps this level, okay? No, sells, what am I talking about? People are in sells and it taps this level. There's a chance that it could grab orders on the way up, okay, which means hitting people's stop losses. Like, let's say your stop loss is here, 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 here. And then that's enough to come back down and fill the range. But that's a bit more complicated. So we're just going to keep it simple, okay? Break-even buys, break-even sells. What does that actually mean, though? Break-even buys, for me, means when price taps... So let's go back to that example. Oh, no, wait. Okay, whatever. So let's go back to the buys, okay? So it's like here somewhere. And then your overall range, support, resistance. So when it taps this, and I say I get into a buy position at this level, let's say I look for buys to take up to here for my full take profit. When price taps this break-even buys, I will secure half of my positions. So if I have one lot in a trade, I will secure half a lot, and then whatever my stop loss is, so let's say my original stop loss is here, I'm moving that shit to break even. So my entry is here in this X, and my stop loss was here, original stop loss. I am now securing half once price taps here, half of my positions, so I secure some profits. Then I'll move this shit to entry. So if price was to come back down, the trade idea is done. And the reason for that is because this is a high potential area for liquidity to continue the move down. Let's say it's making a trend, right? So that is break-even buys and sells. That is your minor zones within your overall range, the yellow boxes. All right, so that is the next step. If the above is met, now you're looking at entries, okay? So I did talk about entries before, but this is actually how you take your entry, okay? Those were just examples. That's not how you enter. Your range isn't always going to be respected. Has price reset or just broken into the range respecting your minor zones, your minor break-even buys or your minor break-even sells? Those minor zones, those orange lines, has it broken? Has it reset? So has it closed outside of the range, resistance or support, or the overall range, wherever it is? Has it closed outside? Has the candle actually closed outside, then closed back inside, forming a tap either in the support level, which is the bottom wick level, or the resistance level, which is the top wick level? And that's what I mean by respecting break-even buys. Or also respecting break-even buys. So what does this mean? So, using the same range to keep things simple. Resistance, support. Break-even buys we established was like around, I'm going to use that bottom wick here, this level here. So this is your break-even buys, okay? And your break-even sells I'll use as pink. Is going to be like using this wick, this level here, okay? So this is where it gets a little bit more complicated. Now, you see there's no reset. The only reset I see is potentially this, assuming that this is a perfectly drawn out support. So price, you can see, it grabbed its top wick, it fell, and grabbed its bottom wick, okay? So this range is complete as far as if you were to ignore all this price action. As far as we're concerned, this range was complete. Now, you see here that the candle closed outside of the range. And then you see the candle close back into the range with this green candle. However, it tapped your break-even buys before it tapped here, right? Your major support. What does this mean? When it taps your break-even buys before it taps your entry support, right? So ideally if price broke in like this, okay, and it respected, i.e. it didn't touch your break-even buys and it came back down and you entered, that's valid. If price did what it did here and it broke back in and tapped break-even buys, there's now no buy positions, okay? Your buy positions are done, because what it could do here, like we said, is that it could just come back down and the trade's done. So when it taps break-even buys, you now know that a sell position at this support is invalid, is done. And part of the break-even buys is that you don't take buy positions from that minor support zone, break-even buys, right? You don't take a buy position from this minor support because it's a minor zone, okay? If it could always come back down here, it could always, again, just shoot back down like this. So what you see here is a tap of break-even buys, okay? Then price continues up and then it breaks above here and taps break-even sells. So now the range is complete. You can't get sell entries because it tapped break-even sells, and you can't get buy entries because it tapped break-even buys. So this is now complete, and now you need to just patiently wait. When the range is complete, you need to wait for a break outside of the range. So you don't get it in this range. It's not the best example, but you want to see something like this before it closes back in, and then you can look for re-entries, right? For example. That's what I mean by respecting break-even buys and sells. So if it does, like I said, you enter long or short with the respect to the above. So you enter long or short if it doesn't tap your minor zones within the range, which is your break-even buys / sells. Now we're talking about risk managing. This is the key, most important part of your trading. This is why you're going to be profitable. It's a common misconception that risk managing is all about RR, which is your risk to reward. So if I just show you quickly, how do I move this? Okay. So your risk to reward. When you place... Oh, I need to change those colors. One sec. Hello? Okay. So, green is buy, red is sell, okay? In this case, green is your profits, red is your stop loss. RR is this number in this box. So RR is 1, which means we're risking a 1-to-1 ratio. So if I'm risking 100 to make, I'm risking 100 down here to make 100 up here. Now, common misconception is people like to focus on the RR and they like to do a 1-to-2, for example. And this means that you're risking $50 down here to double it and make 100 up here. The thing with RR is that it lacks what's printed on the charts, number one. It lacks, it's got some logic to it, but it lacks overall price action logic. And I feel like when I see people trade RR, so when they just purely focus on having a 1-to-2, for example, they completely mitigate any chance of risk managing as per what's printed on the charts. And obviously, your stop loss is just random, okay? If I was to, like, let's say I bought here and I wanted a 1-to-2 and I wanted to aim for these highs, right? Okay. But instead of looking left and being like, oh, okay, there's some rejections here which I can risk manage out of, I don't care. I'm going to do a 1-to-3 and I'm going to take the loss, okay? And it never taps your resistance because you chose to do a 1-to-3. Whereas if you were to look at what's printed in front of you, so let's say like this is like a minor range here and here, you can then use that as a confluence to kind of slightly increase your stop loss and be like, okay, if it breaks the overall structure of this range, so this bottom wick here, there's a chance you're just going to continue down, okay? There's a chance you're just going to keep driving down. So I'm going to have my stop loss at the break of that, and if price breaks into this range, I will take out either if it does, sorry, I'm fucking burping. So it either comes down, which is best case scenario, and it taps here and you enter another buy position with your stop loss below this wick, and price comes back up and now you risk manage, you close both trades. Or you can use this as confluence where price breaks in, grabs the top wick first, and then you can just take out your original trade as a smaller loss rather than just a random RR, okay? Obviously people trade RR successfully. For me, it's not part of my strategy, so there's no point even looking at your RR. So setting the hard stop loss. This is your absolute, if my risk managed position goes in, if we lose, we lose, okay? This is what your hard stop loss means. Is there a range below which could mitigate risk if price doesn't respect your current zone? So exactly what I just showed you with this minor zone here. Let's say, all right, it's not the best example, low-key. All right, we can maybe use this range. So let me just do this. All right. Let's say you don't look left, all right? You just use this range. So let's say your support level's here. Your resistance is going to encompass all these wicks, like I said. So let's say your resistance is about this level. Okay. Obviously, like what I said before, your price reset, so broke above the range, closed back in the range, formed your top wick with this green candle, and then you could have entered sells to take the trade down to your support. Now, risk managing. So let's say I get in on a buy position right here. Okay, let's just get rid of all that shit. Even though you formed the top wick, you would never do this. But let's say you just did it, okay? And price came, you tapped in, so you're in buys. Okay, I forgot this is the weekly. Okay, and it comes down like this. So now you're panicking a little bit. But hold on. Let's look left a little bit, okay? I should actually draw this on TradingView. What am I doing? Here and here, okay? Okay. Let's see you getting in this trade. And your overall take profit is up here, your stop loss here. It doesn't respect your range, which it shouldn't because it's done. Top wick, bottom wick, you're done. But let's say you don't see that and it comes down. Now you're looking at potential areas to risk manage. So when I look left, you see, okay, you can see, and I'll color this in yellow. I'll color this in yellow. Where's my range line? Okay, this box. So you can see that there's a common support level somewhere around here. Okay, and there's a common resistance level somewhere around this level. And you see, it's kind of hard to see in the weekly because obviously you use different time frames, but you can see when it taps here and it didn't actually respect your top wick. So ideally, when price closes back or into this new range below and it forms this top wick up here, you would just close the trade at full. But it's probably not going to do it. But if it comes down like this straightforward, you enter another position to respecting this new resistance, and you hold your stop loss. And I like to do my stop loss below the risk managed wicks. Okay, so that's your bottom wick. So I'm going to have my stop loss below that wick, and the same for the new trade. So let's see what happens. I mean, obviously we know it's going to come shoot down because grab top wick, I think. And it rejected. Okay, you're out. You're out on both trades. Your risk is managed. That wasn't the best example, but if you look at the daily, I'm sure you'll see. Oh no, okay. It just didn't respect. So sometimes this happens. Sometimes price closes in the range, you enter, and it never forms that top wick. Okay. And that's just the loss, right? The idea was you were never meant to buy here, and that was the idea. But then you can also look at minor zones, okay? Be like, oh, where did it ever tap a minor zone? On the weekly, your minor zone's here for break-even buys. Did it tap it? No. But you did have a top wick, so that's why the trade failed. But in this risk managed zone, you can see that it never respected your resistance, and the overall trade idea is done after the break of that wick. Now, if you look left, I'm sure you can probably find some other confluences, like there's another range here, which you can risk manage out of. Basically, with risk managing, you want to find the nearest range below your original entry. So your original range is these two white boxes. You want to find your original range, and you want to find your original range, and you want to find the range closest that will allow you to come out at a net profit of 0 for the entire idea. So if this is probably a better range to use. So if I use this range, for example, okay, that means my stop loss will be below this wick here, because anything below that is clean traffic to drive down. We don't see any rejections prior. So if I was to increase my stop loss to here and here, okay, let's get rid of that second position. So let's say that this range here, I'll do it in yellow, is your risk managed range. Sorry, this is a terrible example, but I don't care. This is your risk managed range. Then what you're waiting to see is, does price close below? One sec. All right, one sec. All right. So does price do this? Form your top wick and then drive back down. If it does that, then you're going to take and close your trade up here. Or best case scenario, does price just drive straight down, no top wick, and that allows you to re-enter and mitigate risk through here. So you'd be in profits here, and then you'd have taken your stop loss of the original trade here. So if it does this, your trade will look something like this. Okay, and that's called risk managing. Let's see if it does it. I don't even know if it does. Does the daily respect it? Okay, let's see. All right. Okay, so let's see. Let's see the trades. So you came for the top wick first, so guess what? You'd be out. You'd be out here, take your small loss, call it a day, okay? That is risk managing. Trading is all about risk managing, it's all about taking profits. Okay, it's something to note. This isn't the best example, but I'm just kind of trying to show you, roughly. Okay, so the next section. Is there a range below which can mitigate risk? If yes, set stop loss to that new range wick low / high. So exactly what I said. I'm doing it for buys only, but you do the same for sells. This price can reject between this range zones to mitigate risk. Mark out this range is the same above. If no, okay, so if there isn't a range or the gap is too big for you to actually come out at 0, then just have your risk management at the break of the original range. So like this wick here, okay? So let's say if this range below didn't exist, you just have your risk management there. Basically, in a very rough format, that is how I trade Forex, okay? It's a profitable strategy. People really, I've heard a lot and I've seen a lot to do with your RR. Like, people don't like having a negative RR. How can you be profitable if you're risking, I don't know, let's say 0.1, if you're risking $10, if you're risking $100 to make $10, like how does that work? But it's all logic, okay? It's all about using what price action's giving you. So using that, what's on the charts, rather than just doing RR. And if you do that 9 times out of 10, you are going to be profitable, okay? Now, this isn't the most detailed how to trade video. This is just a general kind of consensus of how I trade, my strategy. It works. I can tell you it works. You can see it through the streams. So what I will do for you is go through a segment of replay mode. So I won't use this because I've seen what's happened. I'll just pick a random time frame and I'll show you in practice how it actually works. Okay, chat. So if I do like, I don't know, 2020 or some shit, what's a good day? March. Okay, March. We're up here. So I mark my ranges a bit more concisely. I use a line and then I'll use the rectangle to kind of cover closures and stuff. Okay, that's how I trade. So we're on the weekly. Or no, we'll go to the daily. Actually, the weekly is probably a little bit better. We're going to trade in the weekly and only the weekly. Usually use different time frames to see closures that you'd go down to like the 5 minute. You'd never trade in the weekly. But for this, process, we're just going to use one time frame to keep things simple. So I've pretty much marked my support pretty perfectly. So I see this high traffic areas to the left. Okay, potentially respecting it here as well. But I see high traffic areas to the left. This is the same range. Okay, so I mark up this line covering each and every wick I can possibly see that respects this. Okay, every wick that rejects, I'm marking it up as a support. I see this closure, but I also see it just respect. So what I'm gonna do is I grab this rectangle and I cover that in with the support. Okay, until you close below this rectangle, it's still respecting support. That's how I mark up my support level, and then my resistance is the most obvious place for rejection or high rejection. So obviously you have this rejection. So rejection's down here. This wick rejection came up here as well. You have this rejection. You have this rejection. So I'm just going to take an average. So I know the average is like going to be somewhere around here. But what I do is I take the lowest wick and then just draw the rectangle as per. So I'll take this wick, for example. So this covers your resistance. This whole move covers your resistance. This covers your resistance. This move covers your resistance. So these are just better areas to grab your sell position, okay? So obviously, I don't want to make my rectangle too big, but I will just do something like this, okay? So what does this mean? This means that these are resets. These closures have reset out of your major range and it came back down, formed your top wick here to drive back down. Same with here. Grabbed it, reset, came down, and there's no top wick, so you had to come back up to grab that, and now you're able to drive down. Okay, so resistance here, support down here. Now, next thing I'm going to do is mark up the, mark up my break-even sells, break-even buys. There's usually two, okay? There's usually both, sorry. So, minor resistance. I see these rejections here. This move kind of rejected a little bit. This rejected back to entry, okay, which is part of the criteria. Is does your break-even buys account for an area? Does price return back to support and resistance? That's part of your break-even buys. This comes back to support. This comes back to support. This comes back to support. So this is your break-even buys. So what I do is I tap break-even buys, and then it's going to form a red line to kind of highlight it's a roof for me to manage risk. Okay, and then my break-even sell is going to be a common area, that align, that comes back to the selling point. So I'm going to say here, maybe even, yeah, actually here's fine. Okay. And the reason for that, you have this rejection which drives up. You have this kind of move which comes back to entry. You have this move which drives up a little bit. This has strong wicks that rejected but never came up, and then this move came back up to entry. So break-even sells, break-even buys. Now you can have multiple, right? If you really wanted to maximize your profits, you can have one down here because it did tap here before coming up, came down here before coming up. You can even have another break-even sells down here, some rejections here. This one kind of went all the way up as well. You can kind of have fun, but I'm just going to use these two, okay? These are the earliest points for rejection if you're in buys, earliest points for rejection if you have sells, like up here. So you grabbed, so price broke into the range. So actually, this is a much better example. So you wicked up into the range, but you didn't close into the range. So the range is still not respected. Your candle comes down, forms a bottom wick. Okay, You're still not in the range yet. You're still not in the range. Okay. Okay. Still not in the range. Boom. Right there. Okay. So I've obviously seen this, but I would enter, because you closed back in the range, and this is one big reset move if we're only going to focus on this range here. Ignore all this stuff. Here, I would enter. Okay, this bottom wick, because you closed back in the range from bottom wick and it respected break-even buys, so it never tapped break-even buys. Full TP is here. Your break-even buys is here. So these are your two profit targets. And for stop loss, I'm going to look left. I'm going to say, okay, first of all, where's the resistance for a range that's beneath this overall range? Now, my resistance is going to be this level here. Mark that in white. And my support is going to be this level down here. Now I'm going to move right and see if it aligns. Yes, resistance, support can come up a little bit, encompass all these wicks. And this is my risk managed range. So if price comes back into this range, forms a resistance, top wick, I'm closing. If it comes down to here, I'm entering another position to take up to the top, okay? Is there break-even sells or break-even buys in this range? Yes. Is there break-even buys right here? Okay, you can see that there's rejections that come back to your support level. There's loads of them in this side. And then there's this one on this side. Potentially even grab that wick as well for safety. Now, where's my bottom wick to completely negate the trade idea is anytime price is inside the range and forms its lowest wick. So from what I can see, it's here. If I go right, you can now see that price came all the way down to here before shooting back up. So I'm going to move that to this level. Okay, so that's my